Welcome to Stuck, Time to Improv. I'm Mary Scott with BusinessRiff, and I want startups to be wildly successful. One of the things you have to do is pay attention to the money. And today we're going to be talking with Louise Pooley from Pooley Accounting Services. Thanks so much for coming, Louise.
Thanks for having me, Mary. I appreciate the opportunity.
Yeah, so startups more often than not fail, and it has to do with not paying attention to the money. So let's talk about that. What kinds of things do you see happening that people should be careful of?
Sure. I think the biggest thing that causes a bit small business to fail when they're in that early startup phase is not planning accordingly for the amount of money or cash that they're going to need. Um, Often at the startup phase, you're not profitable, you're not bringing additional cash into the business. And so you need to make sure you got the funding to see you through that early period where you're going to be making losses.
Anything else that's particular for startups?
The other thing we see is people don't take the time at the beginning to set up a good financial system to manage their income and expenses. And as a result, they're making decisions based on a whim or, I think this will work rather than actual factual information. And then often because they don't do that, they don't have a good grounding and they have to go back and catch up later, and it just hinders them from day one if they don't understand what's going on from a financial perspective in their business.
Right. And sometimes it's they're spending money tweaking something when they should be spending money on infrastructure.
Yes. Yeah. I mean, a lot of times too, they don't put those processes in place or, they don't outsource stuff when really they should because it's not their area of expertise. We see that a lot with accounting. People are kind of like, I can't afford the overhead. Obviously, we don't typically generate revenue, but at the same time, we can save you a lot of money if everything is set up correctly. Late fees, penalties and interest on failing to pay stuff to the for sales tax and payroll taxes can add up pretty quickly.
Sure. And let's talk about the setting it up in the first place. You need to have a bank account in a whole different institution for your business, right?
That's correct. I mean, one of the other things that we see new business owners do a lot is they commingle their funds. And what they do is they use personal money to pay for business expenses, particularly in that very early startup phase when they haven't got a business bank account opened. Really, one of the first things when they're establishing their business that they need to do is go to a bank, get a separate account. Even if you're going to use personal funds to pay for those initial startup expenses, you want to do a transfer from your personal or wherever you're going to get the funding from over to the business account and then pay the expenses out of the business. It's very important. If you commingle, it also creates issues with taxes too, because the IRS then starts looking at both your personal and your business at the same time and can cause a lot of issues.
Right. When I put my personal money into my business account, I categorize it as loan from owner.
Yeah,
So it stays as keeping them separate. And so what other kinds of tax ramifications do people end up getting into trouble with because they didn't
sure.
know?
Yeah. I mean, the other issue too with not managing and developing a financial system for your finance for managing your finances is that you can get to the end of the year and discover that you made more money than you thought and then end up owing taxes to the IRS and to the state, and then not having the funds available because you haven't planned for it. We have worked with business owners over the years who the tax person has done their taxes and then presented it to them on April 15th and said, hey, now you need to find $25,000 to pay your tax debt. Um, that again can put you behind before you even start because then you're, either having to scramble to find that cash. You can do payment plans in certain circumstances, but again, that then hinders you moving forward because now you've got that obligation that you need to make sure you can pay off. So we often see that issue too. And then if you're not aware of your payroll tax and your sales tax obligations, those, like I mentioned before, the penalties and interest on failing to file or filing late can rack up pretty quickly. And I didn't know is not a good excuse with the federal government or the local state revenue, Department of Revenue departments. So it's very
Exactly.
important to work with a professional.
Exactly. Your bookkeeper or accountant will keep you out of trouble. And speaking of April 15th, have conversations with your accountant on a regular basis and get all your tax information to them in February,
Yeah.
early February. I like to think that Valentine's Day is Love Your Accountant Day. So I personally always get everything to whomever's doing my taxes by February 15th. That gives you time to know if you're going to owe something, you've got time to raise it.
Depending on what type of entity you set up, your tax deadline might actually be March 15th if you're an S corporation or a partnership. So that, we're only 12 days away from that. So, and your preparer needs time to work on it. Um, the other thing, if you don't have financials that you can look at throughout the year, then you can't plan for the taxes and you can't have conversations with whoever your tax advisor is to mitigate what tax liability you might have. There are strategies you can employ with the help of a tax advisor to reduce that tax liability. And if they don't have financials to look at with you, they can't help you.
What software do you recommend to help people keep track of everything?
Sure. So as a firm, we specialize in using the QuickBooks software. We've worked with the desktop edition and the online edition. We also have started working with Xero, which is another cloud-based accounting software. It's not not quite as much name recognition as QuickBooks, but it's a strong competitor to it. And its price point is a little lower for those companies that are, concerned about cost. Um, worst case scenario, an Excel spreadsheet is better than nothing, you know. But we would encourage you to identify a software that's going to work for you. A lot of them now you can connect your bank, your credit cards, and have the transactions come in and categorize them. And then you can press a button and get a report. Whereas if you're using Excel, then you've got to do a bit more work there to be able to generate financials that you can look at.
Sure. And just like your bank accounts need to be separate, your business credit card is for business expenses only.
Yes. Yeah. We encourage business owners to identify a credit card, preferably one that's going to either give you points or cash back or some kind of reward, um, and use that solely for business, pay for it through the business, and avoid using a personal card for transactions. The other thing to bear in mind too is the more accounts you have, the more work you're going to need to do to keep track of your finances. So the more you can simplify that for yourself, like one card, one business account, the easier and cheaper it's going to be for you.
That's true. Well, thank you so much, Louise Pooley from Pooley Accounting Services. We'll put some contact information in the comments so people can find out more. So keep track of your money, startups. And I'm Mary Scott with BusinessRiff. I want startups to be wildly successful, and one of the best things you can do to accomplish that is book a call with me at businessriff.com. And join us again next time for Stuck Time to Improv.